Welcome to The Explainer. Today we're diving right into Supergroup's wild first quarter of 2026. If you've been tracking the online sports betting and gaming space, you know that finding a real balance between rapid customer acquisition and actual sustainable profitability is basically the holy grail. Well, today we're analyzing a company that seems to be hitting exactly that mark.
Here's the roadmap for today. We're going to cover 1. Their record-breaking Q1, 2. Africa versus international growth, 3. The sports and casino engine, 4. Tech upgrades in Supercoin, 5. Catalysts and upcoming risks, and finally 6. Financial health and dividends. All right, kicking things off with Section 1, a record-breaking first quarter. Let's look at the headline numbers that really set the pace here.
Supergroup pulled in a massive $612 million in total revenue for Q1. That is an impressive 18% jump year over year. And you know, what's absolutely crucial here is that this wasn't just some empty revenue pop. This top-line growth actually came from all-time highs in both deposits and wagering activity. But hey, revenue is only half the story, right? Adjusted EBITDA grew even faster, jumping 36% to hit $152 million. So by growing their profits literally twice as fast as the revenue, they expanded their profit margin to a very healthy 25%, up from 22% last year. That is some serious operating leverage.
And just look at their growing reach. Average monthly active customers hit a record 6.4 million and actually peaked at an incredible 6.5 million in March alone. They are acquiring users at a record clip. But the big analytical question we have to ask is, where exactly are all these users coming from?
That brings us to Section 2, Africa versus international growth. To figure out the origin of this massive growth, we've got to look at how management restructured things. Management introduced a strategic structural change this quarter, splitting their reporting into two totally distinct segments, Africa and international. By carving Africa out from the rest of the world, they're giving us a super clear, transparent lens into the differing momentum and the unit economics of their global footprint. Now, what's really fascinating here is the stark contrast in how these two regions operate. Just look at the Africa segment. We're talking explosive 53% revenue growth, generating $267 million. But then, look over at the international segment. It's a much steadier, 9% revenue climb, but it's highly profitable, yielding a 26% jump in adjusted EBITDA. So it's basically a dual-engine model. You've got hypergrowth in emerging African markets paired perfectly with highly efficient, profitable operations internationally, especially in Europe, where UK revenues actually jumped 29%.
Moving right along to Section 3, the sports and casino engine. Let's dig into the actual mechanics and see what those 6.4 million customers are really up to. Now, if you only associate Supergroup with their Betway's sportsbook brand, this next data point might actually surprise you. While the sportsbook acts as this really exciting high-visibility turbo boost for acquiring customers, an incredible 80% of Supergroup's revenue actually comes from their online casino segment. The company describes this as a highly predictable, super persistent, basically annuity-like revenue stream.
So, why does that matter to us? Well, because sports betting is inherently volatile. Take February, for instance. The company faced incredibly customer-friendly sports outcomes. Simply put, the bettors won big, and the house lost. For a pure sportsbook, that would have been a disastrous quarter. But Supergroup's steady 80% casino engine perfectly insulated them against that volatility and allowed them to still post record overall profits.
Let's pivot to Section 4, Tech Upgrades and Supercoin. We're going to look at some strategic tech upgrades they're making to cut costs and tighten up their global ecosystem. First up, a massive move happened in February 2026. They closed the Apricot IP acquisition. Owning the Apricot Sportsbook intellectual property outright means Supergroup literally controls its own destiny now. They moved over 100 software developers in-house, and this centralized approach is projected to rapidly accelerate new feature rollouts and deliver some really significant long-term cost savings. At the exact same time, they're innovating in the payment space. They're rolling out the ZAR Supercoin digital wallet step by step. They started with a soft beta launch in South Africa and listed on local exchanges like OVEX and Vela. The big strategic goal here? To directly slash payment processing fees. Right now, those fees sit as their single largest after-tax expense across the entire African continent. Talk about a potential game changer.
All right, Section 5, Catalysts and Upcoming Risks. We need to impartially weigh the upcoming growth tailwinds against some known financial headwinds approaching in the second half of 2026. First, let's talk about a massive catalyst, 104. That is the number of matches in the expanded 2026 World Cup across June and July, up from just 64 back in 2022. This is huge for Supergroup. Why? Because an astonishing 88% of their 2025 revenue came from countries participating in this tournament. This is a historic opportunity for customer engagement and acquisition.
Another big tailwind is the upcoming regulatory launch in Alberta, Canada, happening in July. Management is highly optimistic here. Unlike the really restrictive Big Bang rollout they faced in Ontario, Alberta's framework allows them to aggressively market to customers before making the full platform transition. That ensures a much smoother and honestly more profitable ramp-up.
However, we've got to impartially look at the risks here too. The new UK tax changes that took effect in April create a recognized hurdle. As CFO Alinda van Wyk pointed out, it's roughly a $30 million pre-mitigation hit to EBITDA. Now, management does expect that operating leverage, marketing efficiencies, and industry-wide ad rate adjustments will help offset this, but for sure, it remains a tangible headwind.
Finally, Section 6, Financial Health and Dividends. Let's see how all this operational performance actually translates to the balance sheet.
Take a look at this cash growth. Even though they returned $152 million to shareholders in the first quarter, which, by the way, included a really generous special dividend in February, their cash position still surged 20% year over year to $422 million. They are literally funding massive growth and paying out investors at the exact same time without taking on heavy debt burdens.
Backed by an incredibly strong 75% free cash flow conversion rate, management confidently reaffirmed their full-year guidance. They're expecting at least $2.55 billion in total revenue and over $680 million in adjusted EBITDA. And this absolute confidence in cash generation is exactly what allowed them to raise their minimum quarterly dividend target to 5 cents per share.
So that leaves us with this final thought. With an 80% casino annuity base protecting them, explosive user growth in Africa, and a massive 104-match World Cup catalyst on deck, balanced against some undeniable UK regulatory and tax risks, is Supergroup's record-breaking Q1 the start of a sustainable new run rate. It's a fascinating financial ecosystem to watch unfold. Keep your eyes on the data, and I'll see you in the next explainer.